Hello and welcome to another edition of Real Talk with RTX. I'm Rusty and this is Ricky, and we're with Real Texas Capital. We're a private lender in the state of Texas. Today we're going to have a discussion on the fun topic of property insurance. Obviously, property insurance, especially here in Central Texas, continues to increase significantly in premiums, surprising a lot of the both homeowners and real estate investors. We're not here to debate that or discuss it. We're going to just talk about the different types of property insurance that you need to be aware of as it relates to buying, rehabbing, new construction, renting, and that type of thing with regard to real estate investing. So as a real estate investor, there are three primary insurance type policies that you need to look at. And it depends on where you're at in the phase of your project. So I'm kind of going to start from the beginning stages of if you're doing a new construction, ground up build, or even if you're doing a fix and flip type project. The first type of policy that's going to be important to consider is a builder's risk insurance policy. And the purpose of the builder's risk policy is obviously to protect the property during the renovation or rehab or construction phase. And it's obviously most commonly used, as I said before, for both the new builds and the fix and flips. And it's a little bit different than your typical homeowner's policy because it typically covers, your building materials, your supplies, tools, equipment, along with the building structure itself, for things like fire, vandalism, lightning, windstorm, and hail, etc. So if you think about the construction project, it's not just the structure, but it's all the materials and the tools, etc., that are on property. And of course, you don't want to be in your rehab project or your new construction for an indeterminate amount of period of time. So builder's risk policy is a temporary coverage policy. So once the rehab is complete or once the new construction is complete, typically your builder's risk policy will terminate and you'll transition into a different type of policy, whether that be a landlord policy or a vacant property policy. One thing that's important to mention with regard to builder's risk is it typically does not include a liability policy to cover any type of liability claims on the property, such as bodily injury or property damage of third parties. So as a private lender, yes, we require builder's risk, but we also require a separate liability policy to complement the builder's risk insurance. Okay.
Yeah.
Number two, go ahead, Rick.
I was just going to say on builder's risk, there are certain type of insurance agents, across the state that focus in on real estate investors, and you can get better premiums. I would encourage everybody to shop with different agents. Don't necessarily go to the same agent. Underwriters change oftentimes about the premiums that they charge, and since you're trying to whether you're doing a fix and flip or a new build, you're trying to reduce your costs and get the same coverage. I'd also just caution everybody to make sure that you're comparing apples to apples on the policies. Deductibles matter. Actual cash value versus replacement costs. There's some nuances there. So make sure that when you are shopping insurance, you're getting what you want out of the insurance coverage. So didn't mean to interrupt you there, Russ. I just, builder's risk is an important topic for all of our real estate investors,
Right.
So.
Yeah. On that note too, with real estate agents, with insurance agents, it's there's two primary type of agents, and we see a lot of our borrowers lean on the more traditional Allstate, State Farm, Farmers Insurance, and there's nothing wrong with those agents or agencies, but you might want to consider an agent that's independent that can shop multiple different carriers versus just being beholden to one particular carrier.
Yeah.
So another once you finish the property, if it's going to be a buy and hold and you're going to get a tenant in there, then the obvious policy you would convert over to would be a landlord policy. And again, it's pretty self-explanatory. Landlord policy is to protect the landlord and their interest in the property while it's being occupied by a tenant. It's typically going to cover the property structure along with providing some liability and some loss of rental income if there is a loss. Typically written for a year and typically easily renewable and oftentimes auto-renewed. So the policy may contain some exclusions that you want to be aware of, because sometimes as a landlord, you might have a transition period where one renter moves out and another renter moves in. You might have to do some light rehab. So if your policy is going to be vacant for more than, if your property is going to be vacant for more than 30 days, you might want to be aware of that and identify if you need to convert over to a vacant structured policy. And that's the third type of property insurance. Obviously, a vacant property is such that nobody's living in the property and completely unoccupied. And there's a higher risk when the property is vacant, since nobody's living there. They're not in a position to maybe catch a potential issue early on, like a water leak or a storm damage to a roof or something like that. So it's a higher risk and it's going to be a higher premium. And typically most property owners don't have vacant property policies in place for very long, because they want to get that property turned and get occupied with a new tenant, or if they're selling it, get that property sold and move on. So as Rick kind of alluded to earlier, there are a few additional considerations that you have when you're buying a policy. You can get replacement cost value versus actual cash value. All that really means is if you do have a loss, let's say it's for a roof with a replacement cost value, higher premium type policy, the entire roof is going to be replaced for the replacement cost. Actual cash value, the insurance company will actually reduce the amount that they're awarding a claim due to the age and related depreciation on that roof. So hopefully that makes sense to you. Two other things I want to point out with regards to policies in certain areas of the country, specifically here in Texas along the Gulf Coast, windstorm, hail coverage might be excluded from the policy because of the high likeliness of windstorm and hail in those coastal areas. So you will need to get a separate windstorm policy if it's excluded. So be cognizant of that. They're not cheap, but they are needed. And lastly, flood insurance. Hopefully you don't have a property in a flood prone area, but you can go online and look at a FEMA map to determine if your property is in a flood zone just by keying in the address, and determine if the likeliness of the need for flood insurance. But that definitely is a separate policy. And lastly, it's your lender is going to have their own requirements for the type of insurance that they're going to expect you to have as a condition of the loan that they are making to you. So you need to pay attention to what those requirements are and get those addressed early on, so that you're not scrambling at the closing table or at the day of closing to try to get the proper insurance coverage in place. So I think that covers it for insurance. Rick, do you have any other comments?
Yeah, I would just say Rusty did a great job of giving an overview of the different policies, policy types, and things to look out for. But I'd also say we are not insurance agents, and we're not licensed, and we're not professional insurance folks. So please find a good insurance professional that you feel comfortable with. Build a relationship with that insurance professional and make sure that they're looking out for your best interest, and that you really review your policies. The devil's always in the details, and if you have a good agent, they'll be finding good carriers, highly rated, somebody that can stand behind the policy. So make sure you reach out to your insurance professional, and hopefully this overview by Rusty really provided a good overview of the different policies to consider, especially on a fix and flip or a rental property or a new build. This is an area where most of our investors have a little experience at, and it's just a necessary evil. So reach out to your insurance professional is all I'd say.
Yeah, good summary there, Rick. So that's it for this discussion. If you do have any needs for funding for your next fix and flip project or fix and rent project, we invite you to give us a call. We love talking about our lending products, and hope we can help you maximize your return as you invest in real estate here in Central Texas. Thank you.
Thank you.